we're going to share with you how you can save money on your monthly mortgage payment. If you don't have a monthly mortgage payment, you probably will one day, and you've got friends and family that do. So subscribe to our channel and share this video with friends and family so they can know how to save money too. Today, we are talking with a mortgage expert who happens to be a good friend of mine. This is Gina Parrish with First Palmetto Bank.
Hello.
Hey Gina, we're so glad you're here.
Thank you. Thank you for having me. It's exciting.
So how can we save money?
Yeah, so we are going to talk about how to save money through PMI. And that's a question I get from a lot of buyers is, what is PMI? They always call me and they say, hey, I've heard of this term. I don't really know what it's for. So we're going to talk about what is it, how to save money, and yeah, let's see what we can do with that money once we save it.
Awesome. Yeah. So there's two types of mortgages that we're going to be talking about today. Conventional mortgage and FHA mortgage. So let's start with conventional. Tell us what we need to do.
So first I'm going to break down PMI a little bit. What is it, how much it costs, and then how we can save it. So PMI is private mortgage insurance, and what that is it protects the lender against you if you default on your mortgage. So hopefully that doesn't happen because we're going to get you well pre-approved and well qualified, but really it's a monthly payment that you pay, and so it can range from 0.4% up to 2.25% of your mortgage. So just to throw some numbers out here, let's say you have a $200,000 loan amount, and let's say that PMI is 1%. So we're talking $2,000 a year that you're paying just to pay so you don't default on your mortgage, and if you do, we're covered. So that's kind of a hard pill to swallow sometimes, having to pay that. But
that comes to about $166 a month.
$166 a month. So on top of your normal mortgage, which consists of your principal and interest, your escrows, which is taxes and insurance, you're also going to have that PMI.
Wow.
Yeah, so $166 a month. I can think of a lot better things I want to do with that and then throw it away and
yes,
get PMI.
Yes. Who needs extra $166 a month? Yes. Awesome.
So, how do we avoid PMI? So the one way is to put down, we're talking about conventional loans here, right? So for conventional loans, if you put 20% down, you can avoid PMI. So a lot of buyers can do that. A lot of buyers can't. That's a lot of money in our market with where housing prices are. So if you can't put 20% down, it's okay. We're going to talk about a plan on how to pay it, and then once you get enough equity, we can talk about how to get it off.
Awesome.
Okay.
Now let's say I put down 5%
yes.
on a conventional.
Okay.
What does that look?
So 5%. So let's just use that same example. We're going to pay $166 a month. We're going to keep paying that until you hit 22% equity. Okay. So once you hit 22% equity, that's going to drop the PMI off automatically.
Awesome.
If you're a numbers nerd like me, then you can go online and look at an amortization schedule, and it's going to show you when that date is. But if you make extra principal payments, this is the second way to get rid of it. So you put extra towards principal. That means you're going to pay it off faster, you're going to build equity faster, and at 20%, you can call your lender and say, hey, I'm ready to get rid of it.
My understanding is they're not going to do it for you
until
22%.
22%.
If you want to do it at 20, you keep track of that number.
Yes.
You call them, and then you say, hey, drop it.
Yes, correct. So
if you don't want to wait that long, how can we save money now?
Yes, so the third way is, if your home has increased in value since you bought it, if you've done home improvements. And let's talk about these very unique buyers who bought during the COVID market.
Yeah, okay. Definitely some of the highest increases in values over the last couple of years that we've ever had. And so you're in a really good place that you got in the market with a decent price on your home, and you put down maybe 5, 10, 15%. Here we are, great increase in value on your home. There's a way that you can use that to your benefit to get rid of your PMI, and that's what we're trying to talk about today.
Yes, so let's say you are that buyer who bought at those amazing 3% rates, and you're in the home for 2 years, and you're still paying that $166 a month. So what I recommend is look at your most recent mortgage statement, and it's going to break down what are you paying for PMI. So look at that mortgage statement. Yours might be different. You might be paying $50 a month. You could be paying $250 a month. It depends on credit, depends on how much you put down. So it's not a set number, but in our example here, we're going to use that 166. Okay, so we're going to look at that number, and we say, okay, we're going to call the mortgage company, the number on that paper, and say, okay, I've been in this house for a few years, I've done XYZ improvements, or hey, home values have increased, I want to get rid of PMI. And here's what they're going to tell you to do. They're going to say, okay, well, let's talk about a few things first. Are you current on your mortgage? That's a big deal.
Yeah, big.
So can't have any late payments. Are you paying on time? Are you paying in full? They're going to look at a 12-month history there and say, hey, well, you have on-time payments. If you do, great. Also, a lot of them want you to be in the home for at least 2 years. So I think those COVID people were here at the end of 23, you're probably past that mark. But talk to the service provider, they may have their own rules, but I'm just giving you a very general guide here. So they're gonna say, okay, you've been in the home 2 years, you're current on your mortgage, we're gonna want you to get an appraisal done. That's gonna be the step that they want you to do next.
Okay, and what does that look like for cost?
Yes, so cost-wise, so I had a friend recently who did it, and he called, and they did what's called a drive-by appraisal. So literally, the appraiser drove by the house, made sure it was still standing, and it was $110.
Wow.
And he paid it, and 3 weeks later, his PMI dropped off, and now he's saving a lot of money.
Wow, so the process takes about 3 to 4 weeks.
Yeah.
But it's definitely worth it.
Yes.
So for $115 investment, it could be a $500 if
It
you have to do
could.
a full appraisal.
Some may require full
Yeah.
appraisal, yeah.
But if you can save $2,000 in 1 year, not to mention the other years that you have to pay, wouldn't it be worth it to pay that $115 or that $500 one time?
Yeah.
Rework the numbers, keep your mortgage rate the same,
Yes,
and just keep moving forward with an extra.
$2,000 in your pocket a year, yeah.
That's awesome.
Yeah, we talk about that break-even point. So
Yeah.
if you can say, let's just say worst case, it costs you $500 to do the appraisal. You're saving $1,500 that first year, then every year after.
That's awesome.
So let's say you have 5 more years on your PMI, you're talking 10 grand like that because you took initiative and you made a call. So it's absolutely worth it. If you bought during those years, make the call,
Do it.
do it.
Awesome.
Absolutely worth it, yeah.
Yay.
Yeah.
Awesome. Okay, so how do we save money on a FHA loan program?
Yes, so FHA is just a different type of loan that we offer, and it's a government loan, and so there's a little bit different protocols when going into that. So conventional, I mentioned, hey, we got to put 20% down to avoid PMI, or hey, we can drop it off after what we just discussed. FHA is a different ballgame. So with FHA, if you put 10% down when you bought the home, then that will automatically drop off after 11 years.
11 years.
That's a long time.
Yeah, it is.
So, but it
No
will.
options.
But
You have to
it
wait
will-
11 years.
You have to wait 11 years, yeah. So, if you didn't put 10% down, then you're gonna be in this other category, which means when you bought the house, you got, it's actually not called PMI, it's called MIP. It's Mortgage Insurance Premium. So a little different term, but basically it's the same thing. Okay, so with this, if you put 3.5% down or 5% or any number in between, it's on there for the life of the loan.
Okay.
So no matter if your home is increasing value, no matter if you've done home improvements, that will be on there forever.
Okay.
Okay,
There's one way
there's one way.
that we can get rid of it.
Yes. And so we can talk about a refinance. And so if you have bought the home and you have an FHA loan, then that's where you're going to want to call me as a lender and say, hey, Gina, I think I've got enough value, my credit's improved, I want to talk about refinancing into a conventional loan, and let's see how we can get rid of that. And so we start crunching numbers and we just see if it makes sense, and it's a great way to
Yeah.
to get rid of that.
Definitely. If you bought low and you've been in your home for a while, it might be worth it. It
Yeah.
definitely might be worth it. Even though the rates are high, it still might equal out better.
Yeah.
So you need a professional like Gina who can run those numbers for you, know how to help you the best.
And with refinances, the number one question I get is, how much do I have to bring to the table? And I'll say nothing. We actually roll all the closing costs in. So that's always some people's really big hesitation of like, yes, I can save this money, but I don't have $2,000 to move forward with closing. We can roll it in. We literally let you go to the attorney's office, sign on the dotted line, walk away. Sometimes even with the check, if you need some funds, if you have enough equity, and walk away with some other money, and then you move on and you save money. It's great.
So refinances are not scary.
Yeah.
They're not irresponsible. They're actually, we're going to talk at the end of this video about ways that you can actually benefit from refinancing. Okay, Gina, so we have all this extra money. What should we do with it? What should we do with that $166 extra we have a month?
So we're gonna go on a girls trip.
Woo!
And we're gonna go shopping and get our nails done. No, I'm
I love
kidding.
it, I love it.
So you
Maybe
can-
in the first
you
month.
can- maybe the first month. Okay, and then we're gonna be responsible adults.
Yes.
And we are going to save our money. And actually, what I recommend, just from a lender's perspective, is the goal eventually is to get debt free, right? Pay off your house. So use that extra $166 a month. You're already budgeting, you're already used to making that payment. Let's put that back in the mortgage, and let's put it towards principal only. So when you go into your portal and you make a payment, a lot of times it will give you a little option to say, hey, pay this extra amount towards principal only. And so if you do that, it's just gonna pay that off a lot quicker.
Yeah, and that looks like $2,000 in a year
Yeah,
that you'll be putting towards your principal only.
Yeah.
That's amazing.
it's amazing. So, and a lot of people don't even know this. It's always a tip I like to give at closing, but it kind of goes in one ear, the other is a lot involved in that. But if you make one extra payment a year, you can pay it off 7 years early. So let's just say you're on a conventional loan, right? And I
30
say,
years.
I mean, yeah, so if you have a 30-year mortgage, I say, hey, instead of paying that, $2,000 mortgage or whatever it is, let's make that one extra payment a year. And all of a sudden it's 7 years off the life of that loan. That's a lot of money in interest you're saving.
That is
That's a lot. So let's be smart. Let's, put it back in the mortgage, invest it in other things. The CDs are doing great right now. Like invest it in other ways. We're going on a shopping trip.
That's right.
A little bit of both.
That's awesome. Yay. So we're still talking about saving money here and being responsible about that savings, which is just the right thing to do.
Yeah.
So awesome. So there's some people who are eager to get their mortgage paid down, and there's some people who might actually be moving in 5 to 7 years. That's the average that people live in their homes. So what's a good way to look at that?
Yeah, so I'll give you an example. Actually, you helped me buy and sell my first house, and it was an amazing experience. And what I did, we actually did put extra principal towards it because we always just had that thought of, okay, if we put more down now, when we sell, we'll have more equity later. And we were a newly married couple, and then we had our twins, and then it was okay. We want to put more money down in our next house just to have more financial freedom, to get rid of that PMI. So we made that extra principal payment, and then by the time we sold, now we had extra equity in our home. We put a larger down payment on our new house, and then we avoided PMI.
That's awesome.
So that absolutely is a way. It's not a one fit. It's hey, what's right for you, what's right for your family. But there are so many ways that you can just look at this overall goal and just make it make sense.
Yeah.
Yeah.
It's definitely still a great time to buy a home. Still a great time to jump in there and learn everything you can about being a homeowner and about mortgages and about options. So Bo and I are here to help you. We want to put you in touch with people like Gina that we trust and that we knows what they're talking about. They're great at communicating. They're great at walking alongside you as you are jumping into a first-time home purchase, or even just you've done it a few times. Maybe you've had a good experience, maybe you haven't, but we want to make sure your next experience is great. So we're here for you. Everybody wants to know what's going on in the market today. What do you see coming in the near months? What does it look like?
Yeah, so I think we all can agree that the COVID years were our golden years.
Yes.
And we all missed that. We want those rates again, but that's just not reality. As we know, there's been many consecutive rate hikes over the last several months, and this past month they paused, for the first time. But there are talks that it's going to go up again one more time before the end of the year. So obviously we can't predict the future. We don't know what the Feds are going to do, but we can just say, hey, let's make a game plan for what's happening now. Right? We can't predict what's going to happen, but the prediction would be next year things are going to get more competitive. Rates are going to come down. So let's talk about some strategies for buyers now, because what's going to happen is when they drop again, we're going to get really busy again. And what's going to happen with that from a realtor's perspective?
So definitely we're going to have more buyers jumping in. They can get now a 5% rate. And that sounds great compared to 7, almost 8% right now. So more buyers are jumping in the pool. More sellers are also encouraged because they can sell their home and they can move up or they can move down and they can still have a decent rate. So we're going to see real estate boom again. Like it is not over. This is not gloom and doom. This is a time where buckle down, jump in the market now, because you can still get a house without a whole lot of competition. There's still competition, especially in certain price ranges in our area. But for now, go ahead and get in. Yes, the rates are high. It might cost you a little bit more money, but there is hope. There's hope that those rates are going to drop. And when they do, you need a great lender to help you refinance that home, get that lower rate, cut that PMI, and put some more change in your pocket.
Absolutely. So I tell all of my buyers and encourage them, what you're paying right now is not your forever payment. This is right now. So can you stick with this for a good 12 months, 18 months? Can you make that work? And then when rates come down, I'm going to call you back. You don't have to know what rates are doing. That's the great thing about working with the local lenders. I have all of my clients on a rate watch. So as soon as rates drop, I get an email saying, oh, Nikki's rate went from this to this. Give them a call. And so I call you and say, Nikki, it's go time. Let's refinance. Let's save you that $300 a month, maybe even PMI at that point, and start doing what you want to do. So it's a great time. I know end of the year, early, 2024 may not seem like the ideal time. A lot of people like spring and summer with school and stuff, but it really is a good time. It's not as competitive. Things are a little bit slower from a market standpoint, so it's just a little less stressful from a buying and selling perspective. If you can swing that.
This is definitely a time to still be looking at your real estate searches. give us a call, let us get you on a search so that you can see what the market's doing. You'll be able to watch when there's price drops, you'll be able to watch open houses. We have a great way to let you kind of guide the ship, and bow and iron, no pressure. We're here for you when you are ready. We're not going to be pressuring you guys. So we do want you to be in the know. We do want to bring you great information like this that can help you reach your goals. That's our goal, is to help you reach your goals. And so give us a call. Let us know how we can help. We're here for you. We're on your team. You also need a great lender on your team, and we've got some for you. So we've got Gina for sure. So give us a call. Stay in touch. Subscribe to our channel and like this and share it with your friends.